Hi, this is Peggy from Roar. So David Fry, the CEO and founder of PAYS Financial, is our guest today. So PAYS offers buy now, pay later solutions for travels and soon for home improvement, electronics, apparel, and so on. So thank you so much for being with us today, David. That's great to have you with us.
Great to be here. Thanks for having me.
Thank you. And we're very lucky because you have a wealth of expertise in financial services, technology in North America and Europe. So you're going to, I'm sure, infuse all of that in your answers.
No pressure.
No pressure at all. So first question. So from your perspective, what are the major impacts that COVID will have in financial services?
Yeah, I think so. I think there's a lot of impact on sort of two areas that I tend to focus on. So one are the customers of financial services, and the other is the financial services entities themselves. And I think those are two ways to look at it, but they're obviously connected because the institutions are going to have to adapt to what consumers are doing. So if we look at consumers, SMEs, corporates that are all customers of financial services, there's not anybody anywhere on the planet, any one of those different areas that's not been impacted by COVID. And the reality is that mainly in a pretty negative way. For sure, we've seen consumer spending decline precipitously during COVID. We've seen their appetite for physical interaction decline precipitously. We've seen I think their employment situation obviously changed pretty dramatically on average with historic unemployment rates. And we've also in the SME sector seen just a massive, really like a scythe almost go through entire industries, right? Hospitality, restaurants, travel, et cetera. So that's an immediate but really long-lasting impact there as well. And how do financial institutions then deal with them? And then we've got large corporates. Again, hospitality and travel that are, largely in big trouble. Retail, I guess, as well. We've already seen a number of bankruptcies. We see airlines going to the government for handouts, et cetera. So that's a big, long answer to say, a lot of the bank's customer base across consumer, SME, and corporate has really changed quite dramatically, right? And so that's creating, I think, a new opportunity / problem set then for financial services to deal with. And then they themselves, looking internally, are looking at banks close now 30 odd % of branches. They're seeing that people don't want to go to branches. They're seeing that dealing with employees and the personal sort of cleanliness, hygiene protocols, or some people just don't want to do that from an employee perspective. So what is the residual impact of that, right? Do all those branches post-COVID, do they reopen again? Probably not, because in between there, that shift on the consumer side for an increased sort of digital interface or digital interaction changes the business case or use case of that, right? You've got employees then generally that most of whom, by the way, a bank would never do anything this dramatic unless they were forced by a regulator or a global pandemic. And I guess we got one that forced the bank to move 80 to 90% of their employees to remote and working from home. And so that's been a giant petri dish experiment, if you will, of can we actually do this? Can we do it? Yes, check mark. Does it work? Actually, surprisingly, in the most cases, yes. And then the next question is, now what? Right? So now what? So we've got, potentially post-COVID, we've got a lot of people that probably feel quite comfortable working from home. Their productivity is as good or better. They're saving an hour on either end of their commute to be with their families. Look, for some people, maybe they don't want that too, but I think the lasting impact probably is a lot of flexibility around looking at those kind of situations. And then that has a big impact on things like commercial real estate.
Exactly. And real estate in general, if people now work from home 2-3 days a week, you just have to commute 2 days. Do you still want to pay for your house close to work at such a big rate? So it has lasting impacts. So you mentioned briefly regulations. What do you think will the impact of the crisis be on regulations and policies? Do you see new regulations coming? If yes, what type of regulations?
Yeah, so let's maybe put the kind of securities regulation aside for a second and sort of focus more on banking, right?
Mm.
And I think that we've seen a shift from consumers and SMEs that was already underway that's been accelerated dramatically for the demand for digitized financial services. I think that the banks, who most of whom were already kind of underway on that, and some of whom are ahead of others, it's shone a light on, you know, who the good players are, who are the sort of middling ones, and then who's way behind. So there's a lot of work to do there, but it's also shown, I think, where the fintechs can step in. And you know, there's a lot of sort of comparison sort of studies that come out, but I think one of them I read recently had to do with account opening, and you've probably seen the same one where it looks at all the challenger banks, and I think it's mainly from the UK, and you know, opening an account with Revolut, you know, 26 seconds, opening up an account with Starling, you know, 38 seconds, opening up an account with HSBC, you know, 8 minutes and 23 seconds or something like that. So I think that I think the fintechs are seeing an opportunity there, and then it'll be interesting to see then how the regulators want to look at the fintech's desire to become more like banks, right? And I think the fintechs, so like us, coming from a lending background, we've sort of taken that and put it into kind of a spending product, so lending and spending, and then the third leg of that stool is savings. And if you sort of look at, and I'm focused on consumers in this instance, but those three things kind of packaged up together. And one of our competitors, a firm, just sort of announced, I think a week and a half ago, that they're launching a savings product. So you can see how those sort of go together with that same customer base. But at some point, you know, that's kind of starting to look like banking, folks,
Exactly.
right? Like, so I think that the U.S. through the is it the OCC, the Office of the Currency Controller or whatever they're called, I think they're dealing with kind of that demand. I think regulators are going to start to see more of this kind of business model of putting lending, spending, and savings together. And you know, what does that actually look like? What's the definition of banking? So I think there'll be those dialogues, and that's good. I think at the same time, coming from the looking at the U.S. again, big tech has probably seen a lot of opportunity here as well, right? And big tech is really good with user experience. Big tech is really good with data and understanding their customers, and providing a platform, right? Which is what Google is, which is what Amazon is, which is what Facebook is, a platform of offering, right? Based on my understanding of your needs and desires. And if that was already underway pre-COVID, I think that's much further underway now too. So that'll be another thing I think that regulators are going to start to see, you know, kind of have to opine upon as we get into, you know, the next sort of 6 to 12 months.
And quickly, you know, because
Yeah.
they tend to move at a slower pace, to be positive. So, but the industry is moving at light speed right now, and you're absolutely right. The big tech players, it's something we don't really speak about. We tend to speak a lot about financial institution and fintech, but that's, you know, like the tip of the iceberg. You don't really see the Amazon who's coming and has been literally eating everything from behind.
Yeah, so I think that that's right. I think the business model really then starts to evolve into financial services becoming businesses that are platforms, businesses that are product manufacturers, and businesses that are kind of regulatory infrastructures, right? And so, and if you look at what Citibank did with Google in the US, that Citibank sort of became the regulatory infrastructure essentially for Google to have a bank. Essentially, it's not a bank because it's actually Citibank. There are others that'll want to be the platform, right? Like if I've got 1 million customers, then I'm not going to cede them to Google or Facebook or Amazon. I want to be that platform. And then there'll be others that are just going to be really good at manufacturing some product, right? It might be a money market account, it might be a credit card, it might be something. And then the financial services platform then really gets away from the capital intensive businesses of product manufacturing, and they get into more lower capital, higher RAROC, higher return businesses that are fee based, right? Of directing the best product to the customer that I really understand, right? Isn't that what Google already does right now, or Facebook or others?
Yeah, exactly. And that idea of really focusing on your client and making sure these are the people I know well versus being everything to everyone, meaning not serving anyone properly, which is the current business model, is
Mhm.
definitely not what's working. But I hear you, they're becoming a beacon because they're regulated. So
Yeah,
what has been an hindrance is actually saving them, I think.
yeah.
Um, if we look at the global financial order and global financial stability, what do you think we're aiding towards? Any positive, negative, probably insights here?
Yeah, well, how about we start with Fitch just downgraded Canada yesterday
Yes,
from
right,
AAA
yeah.
to AA plus. So that's how I would have started this answer anyway. Before that, to say that there's a mountain of debt that we've already incurred and are continuing to incur to pay for this. Obviously, the worst, or sorry, the case of not doing that is worse, right? So just letting people and businesses
Yeah.
and whatever just go bankrupt. That's certainly not a good thing. But we have an immediate and a lasting, I think, impact of a lot of accumulated debt. And at one point I said to somebody probably 6 weeks ago, I said, countries like New Zealand, who were really kind of forward thinking on this, who shut things down quickly, who locked the borders and really kind of took this thing quite seriously, they're going to be better off longer term because they didn't have to print billions or trillions of dollars of debt to cover up some of the mistakes that were made, right?
Yeah.
And I think that sets countries up like that, so really kind of better going forward. But I think the world was already pretty unstable, I would say, kind of
Mhm.
coming into COVID. Geopolitically,
Yeah.
it's become much more fractious. It's become much more kind of egocentric or country specific in their own interests. And so I think the world order was already shifting. And now you kind of add in COVID, and I think the wild card there is who comes out of this economically strong, who hasn't had to print money like it's going out of style,
Yeah.
and then has, I think, a much better control over the next sort of 5 to 10 years in their country.
Mhm. Yeah, that's interesting because I'm sure like Sweden took a very different approach to the crisis, and the Financial Times, I think last month, was comparing Sweden with other countries and saying, well, you have exactly the same rate of cases, so why did you do that? And I'm like, well, there is something called debt that they won't have to incur because they didn't close their economy. I think that's a pretty good advantage. So I hear you. I think we tend to minimize the debt. Most people, again, we're in financial services, so we probably look at it with a different perspective. But I think the majority of citizens don't necessarily understand that the money that's coming from the government is not just printed and distributed like that, which makes people maybe underestimating the challenges we're going to face in the future.
Yeah, and I think so. That's the macro side. I think there's a microeconomics thing here too. Now, here's the economists and me coming out. That the countries that reacted really quickly, shut things down, they were the first to come back and start to reopen and recover. And so the immediate and prolonged impact on the businesses that had to shut down, which was pretty much everything, I wouldn't say it was minimized, but it was certainly reduced from what others had to do and that continued to do, right? And so that's another thing I think that kind of talks to the long-term health of an economy, of the diversification of business and risk appetite. I think that's the countries that have done really well at that. I think that's going to benefit them again going forward versus those that haven't.
Yeah, I absolutely agree. If we look micro in terms of financial organization, or I would even put big tech in that now, in terms of resetting competitive positioning, who do you believe benefit from the crisis and who is actually going to lose from a financial service provider perspective?
Yeah, I guess if you're a day trader, and Robinhood would probably come up in that. So
Yeah,
let's,
yeah.
yeah. So Robinhood is probably single-handedly responsible for what, the last 10% in the S&P or something.
Yeah.
But notwithstanding that, I think those that had been underway or had already probably distinguished themselves as having good product, digital interface, and really kind of focused on the user and an understanding of them. They're pretty well positioned, and versus others that weren't. And I'm not going to sort of single out either side of whether that's a bank or a fintech, because I think there's both examples there. Particularly when you get to the US and you have so many more banks and financial service providers, that you can see some of the larger banks have actually done quite well at that, whereas some of the larger banks also haven't done great with that. But I think getting back to kind of what people want now, as a consumer in a small business, it's really, I think, important to kind of reevaluate the problem set as we look now and sort of going forward, say, versus 6 months ago. So a lot of product would have been built around, it sounds crazy to say, like it's almost a lifetime ago, 6 months ago, right, where the problem set was different.
Exactly.
We could certainly say today, though, the problem set it would be different in that there's an increased demand, desire, focus, need for more digital if I'm an SME, more digital if I'm a consumer, more digital probably as well, at least in terms of a client interface with corporates, right? There's a lot of, think of like all the business travel that's not happening now. Does that mean that business is stopping? Well, no, it just means that, like you and I are doing right now, we're going to try out something different, that's more virtual, more digital, and we're going to make do, and then we're just going to constantly iterate and try to improve on that as we go forward. So I think that there's the losers really are just like, it's like Darwin. Like Darwin said that it's not the strongest that survive, it's actually the most adaptable, right? And if you're not adapting now, like I think everyone's just been hit with a sledgehammer, right? And really, like that's the wake-up call, right? It's the ability to kind of recognize that this is happening. I think we were talking off air before about institutional inertia.
Mm-hmm.
And I saw something on LinkedIn the other day where they said somebody was interviewing somebody, and they said, well, the reason we haven't done this is long-term, was it long-standing company policy? And I looked at that, and I actually read that like in my mind as long-standing complacency policy.
Yeah.
And so I wrote back saying that equals that, right? And so really there's no excuse now. There's no excuse now not to re-examine kind of everything, right? And I guess that's the startup side of me now, that I've had to learn that, coming from a corporate kind of world, and it's not easy. But if you're really sort of looking at kind of like, wow, this is like a new world, what is the problem set, right? It's got to be totally changed, and how do we take advantage of that so that it's not just a problem, but there's actually opportunity in there.
Yeah. So if you're putting maybe back your corporate hat or your financial institution hat, what do you see in terms of transformation there? Because you mentioned these long-standing policies that don't make it. I was speaking with Société Générale last week, and which is a French bank, a large bank.
Yep.
And the lady I was speaking with was telling me that every time one of her employees wanted to take even just half a day working from home pre-COVID, she had to do paperwork. So talk about changing mindset. We think we're changing mindsets here. You just have to cross, and be in Europe, and you're already in a very different ecosystem. So I see a lot of changes in this type of complacency or bureaucracy that wasn't making any sense happening. What's your perspective?
Yeah, like I don't want to sort of turn it into a bank bashing thing. And in their defense, I think that the desire, there's no lack of desire, I think, with banks, and with, they're full of a lot of smart people as well, that can see what's going on and have a desire to change. But I think it's the ability to do that, to execute upon that. Like that's the challenge with legacy everything, right? Legacy hierarchy, legacy policies, legacy infrastructure and technology, legacy and data is a real tricky one too, right? We financed a car last year, and it was through sort of the dealer truck thing. And one of the questions from the lender was, "Do you have any other products with us?" And I was kind of like, I looked at my wife. She didn't realize, like, she thought that was a pretty innocuous question, but I thought, like, why am I telling this financial institution
Maybe
whether I have any other? Yeah, and you know what that is, though? That's the legacy database infrastructure that exists within most banks, where, you know, there's a credit card over here that doesn't talk to the savings over here, or the car loan or the mortgage over there, right? And you know, a lot of fintech is built around the assimilation and aggregation of that data to really understand that customer and create better experience. So that's you know, it's a tough thing, I guess, but you know, I think, boy, if there's anything that can sort of energize that movement, it's what we're seeing right now.
Exactly. If after that we're not capable of accelerating that digital transformation we've been hearing for 10 years in banks, I'm not sure what is needed.
Yeah.
And that's the last thing. And talking about transformation from your perspective, so what has changed? Obviously, working from home, but did you pick up good habits? Did you dash bad habits? What has happened for you in the last few months?
Yeah, so you know, I think you probably heard this before. Tech companies have generally been set up for this kind of thing, in that we'd already had a lot of people working remote or distributed, and we're already big users of Slack and Google Meet and Zoom. I probably wasn't even Zoom at that point, so we've had to learn. For me, it's like downloading another one of these things, like almost every week, of, you know, Microsoft Teams, WebEx, GoToMeeting, and whatever, and they sometimes kind of conflict with one another. But yeah, that's fine. I think that hasn't been too much. I think where the tech where the problem is in terms of creativity and iteration and design. That's what I call sort of non-linear process. So linear process works really easy, I think, virtually, where, you know, you do this, I do this, and we just sort of go like that, and we can solve things. I think when things are really kind of collaborative and iterative, for instance, like, you know, having 4 people in a room in front of a whiteboard, where you're continually drawing, erasing, drawing, and erasing, and there's, you know, that is, I have found it almost impossible to replicate virtually. So it just takes, you know, it probably, for me, it's probably 10x the amount of time that kind of thing takes virtually versus doing that in that room. So I think, so that there's that. I think, you know, personally, I have 3 teenagers, one of whom is now having a cello lesson out in the garden, because that's the COVID friendly way to do cello.
What was he doing in March when it was so cold? So I guess no lessons at all?
Yeah, we had no lessons at all because the
Okay.
instructor didn't want to come. So we figured that this is really just, you know, it's like breathing. You figure it out, right? You sort of like, if the alternative is you can't do it at all, then, you know, like, that's a pretty hard thing to kind of live with. So you'll figure it out, right? I have another one who's now started her grade 12 functions, and 6 hours a day kind of doing that upstairs on her laptop. And then another who's binge watched every series you can imagine on Netflix, like a lot of us. Yeah, look, but I think the habits, somewhere along the way, we came up with a family wellness hour at 5 o'clock, where we all go and exercise. And sometimes it's together, like on a run. Sometimes it's an indoor workout. Sometimes, you know, people are doing their own thing, but you just do that, right? So I think that's, we got pretty sporty kids, so sometimes they're dragging me along, which is good, as opposed to the other way around. So I think that's been good.
That's such a great idea, actually.
Yeah, so I think that's a positive to come out of it. But yeah, you know, I think we all miss the interaction, right? Like, you know, it's great to see you. You know, probably haven't seen you physically for 6 months, but you know, maybe you'd say the same. It would be much nicer to be sitting across the table from you with a coffee or something, as opposed to this. If the alternative is nothing, then yes, this is obviously
exactly. Well, that was really, really great to chat with you. Thank you for your insights. Really, you know, very thoughtful. Which again, that was my expectation. So I'm really, really happy with that. And you know, good luck with everything. And looking forward to that coffee in front of you in a coffee shop very soon, hopefully.
awesome. Great. Thanks so much for having me.
Thank you. Bye.
Take care. Bye.